Hello guys and welcome back to the channel. So I just got done watching the Q2 Palantir earnings call, and I think Palantir, as always, is a very misunderstood company, and there were some really hidden gems that I think if you're a long-term investor you have to see. I watched the earnings call so you don't have to, and I'm going to show you some sound bites that are super important and honestly totally calmed me down. At first when I saw the numbers I was very pissed and I was like, maybe my whole thesis is broken. And, Palantir is maybe not a good investment. I even did a video yesterday that was saying, why I'm changing my mind maybe about Palantir, and I have to sit down and do the numbers. And I still haven't done that, but I don't feel that there has been a big change. Yes, they had a bad quarter, but honestly, if the stock price goes down, it's more of a very good buying opportunity. And the company is doing better than ever. And you're going to see from these sound bites that this is just a normal way of them doing business. I'm more optimistic about Palantir than ever because Alex Karp has made comments on when they're going to be profitable. He made comments about other products that they're working on. He made comments on the 10-year plans of Palantir. So again, very, very exciting. Subscribe to the channel if you want to see more videos like this one. And if you want to support me and the channel, you can check out the first link in the description box below where you can support the channel for $5 a month, get direct access to me and to all the valuations that I do. Anyways, let's begin with the first soundbite.
Our first question comes from Martin, who asks, when are you expecting to become profitable?
Thank you for your question. We driven by our 5 products and by our ability to control costs, mainly because we left Palo Alto, which we left primarily for political reasons, but of course Palo Alto is somewhat of a inelastic luxury product, meaning you must pay and pay and pay for the comfort of having oddly misaligned with American interest political views and in general high costs. And that combination of radical optionality on expenses and what we perceive to be macro conditions converging with product conditions allow us to kind of see what we think will be a profitable company in 2025.
So he said it. He thinks they're going to be profitable in 2025. Now, I don't think that this is a positive for the stock price because I do believe many people were expecting 2023, 2024, and these still might happen because my experience with Palantir is that they have been sandbagging, and especially when they make short-term predictions, they tend to outdo them. A prime example of this quarter, they said that their adjusted margin was going to be 20% and it came in at 23%. And as far as I've been following them, they have been outdoing the short-term numbers. This is a bit of a longer-term number, but I am highly confident that Alex Karp was sandbagging on this. In any case, at least we have a prediction on this from management. As for the stock price, this is not as important as you would think. The stock price of Palantir mainly comes from its growth, and that's what you need to watch the most. So if they're not able to keep the growth numbers, they don't deserve the stock price that they have. And this is going to be addressed in these questions, and they finally gave really, really good answers. I just really liked it. So let's go on to the next question, which is about what Alex Karp thinks the company is going to do in 10 years and what it's going to be like in 10 years.
Our next question comes from Jose, who asks, what is your 10-year plan for the future?
Well, we built 5 products. Those of you who follow us know them well. Those of you who don't follow us know them well because they've influenced your life, especially PG, our anti-terror product. Foundry, which is responsible for any vaccination you've had if you're listening to this. If you're listening to this from America and Britain or 20 some other countries, those of you who are following the war know some of our other products, even at a distance, and a number of other products. We are going to continue to deploy those products. By the way, as you may have noticed, we've now crossed the $1 billion mark a second time when we DPO'd. There was a real question, could Palantir cross the $1 billion software mark? This is a massive mark for enterprise software. We've now crossed this in America. We will cross that for all 5 of our products. Obviously, Foundry will be a multi-billion-dollar product. We will do this in the service of the West, which we will fight to help win, rejuvenizing institutions the way we have in the past on numerous fronts. We will use the distribution network we have built to provide them these institutions with new and better products. Apollo will be a multi-billion-dollar product as a standalone product. Our company will be, as of in the next 2 years, a 70% dollar revenue company. And we will preserve our culture. And we are going to do this our way, essentially, which is a very long-term focus. Do not expect us to be like another company. We will make aspirational goals. I think there's a lot we could learn, by the way, on modeling these goals. But we believe we're the best in the world at software for the West. And with the attributes and warts of that, we will push forward to make the West stronger and better and build a multi-billion-dollar company on top of each one of our single products. By the way, we'll build new products. We're already working on a number of products. We have products like Nexus Peering that are not apparent to the world that power very important things, and we'll continue to build those kind of products as well.
Again, this was a lot of mumbo jumbo, but the crux of it is that he sees that their main 5 products are each going to be multi-billion-dollar businesses, and they're going to have a multi-billion-dollar revenue connected with them, and they're working on more products. This is in the next 10 years, and obviously this is super bullish, and I'm very glad to hear this because this is new to me as an investor, that this is what management is planning, and this is great. Was this quarter a bad quarter? Yes, it was still better than what they guided for, and unfortunately they lowered their guidance, but this seems to be a short-term blip on the radar if they're following through with these plans. Now we go on to the next one.
What are you doing differently from your competition that is allowing you to be successful?
Well, we're pretty orthogonal to our competition. So I wouldn't even and by the way, I would say we're less competitive with our competition than, we have a lot of people compete with us. Most of the companies that kind of are built for Wall Street, which have, perfect financials and have perfect, proclamations of what they're going to hit, and very, very thin products, sales forces that are 50% of their total people. The sales in the U.S. commercial, which are, by any standard anomalously strong, almost 80% growth this year without SPACs, total organic revenue. It's being driven by 42 salespeople. Is less than 1.5% of our company.
I'm completely mind blown. So they're doing all these sales with less than 1.5% of the company. That is really, really different. And it's an underappreciated fact about Palantir.
Ours a credit. We have more, but those are the ones that have actually learned our product and are able to sell it. This is a company, we have this, and because of there's some real features, we built this product. The product is obviously ahead of the market. We believe the growth in the U.S., you can tell a trend line of this is doubling now again, or close, without SPACs. You could see how this could double or be in that range again next year. And again, we're doing this in a completely unique way. And so then I would also say, as competition, one of the things that is just not paid attention to at all by the normal investing company is the very basic fact of, is this a product that will be in some ways replicated by the big companies?
I'm so happy he brings this up. This is one of the key risks when you invest in Palantir. Are we going to have Microsoft, Google, or one of the big companies, Oracle, come around and just copy their product, have a smaller version, doing 20% of the work and taking 80% of the results? Very happy he's addressing this.
It's truly interesting, great companies, but that will basically take thin products and get them into their offering and have better distribution. And in fact, in the end, the products are, over a long period of time, relatively worthless. So you get a high growth built on back of selling equity and going into and taking that equity and buying a sales force and selling a thin product, which is no longer going to be around in a couple of years, either because it will not be useful or because a big company will replicate it and sell basically the same product. Our products are not like that. Nobody is really endeavoring to do a version of PG or Nexus Peering, which people don't understand, which is powering defense efforts globally. Foundry is very thick and is essentially hundreds of products integrated and can be and deployable quickly. You have Apollo. These are very, very unique products. And so what I would say on the competition thing is it is surprising how different we are from other people in, broadly speaking, the same space. And that has some advantages. We see enormous traction on our products. You're also getting this at a price because we run this company as owners. and we do not run it purely to actually make people happy quarter to quarter. I honestly don't pay a lot of attention to that. I'm paying attention to where will the company be in 2 years, and what will the products be like in deployment. Will they be adopted? Who's building them? How are they going to be built? And are they in fact in front of the market? So we have this very unique hybrid. You have to look at it as a unique company and assess it as, well, what feature set do I like? What bug set do I not like?
So this is obviously very important. He addressed one of the key risk with investing in Palantir, and that is the competition that can come along and eat their lunch. And there's going to be one more segment about this that is very useful to hear as a long-term investor. And as we know, he also reiterated that they are not here for short-term investors. They don't care quarter to quarter. And unfortunately, I've done a lot of videos about this, that you love them or hate them. This is how they are. This is not going to change, and they're not going to say things and, present things in a way that Wall Street would like to pump up the stock price. And I happen to think that this is good because it gives us an opportunity where, you can buy the stock very cheap for an extended period of time. But I know a lot of people on YouTube, and there are a lot of people are just going to hate it. I completely understand. I think it creates a fantastic buying opportunity. So on to the next gem, which is asking about what the heck is going on with the government side, because Cathie Wood sold Palantir because, they slowed down on the government, and this quarter clearly showed that there is more slowdown in the government, and this is the opposite of what was supposed to happen with the war in Ukraine, and them having a bigger sales force, and it's honestly a very big red flag. However, I really like what he says to this question.
Good morning. On the government side, I'm curious if you can address what you're seeing and some of the deals that you expected to close. Can you give us a sense of kind of timing on the government side? And I had a quick follow-up question for Alex.
You want to take this, and I'll give my riff?
Sure. Look, the programs that we're going after, these are enduring programs. The competition is ongoing. The needs that we're servicing here are vital to the future of the West on both fronts of the potential conflicts. We have revised guidance given the clarity that we have around when we think we're likely to get them. And so, we continue to invest in these things. The pipeline around the government business continues to be really robust, both domestically and internationally. But we also have more certainty around what is obviously a frustrating contracting experience.
Let me give you a different riff on this. A number that I don't know if I think we shared on one of our earnings calls was that our government U.S. business has a CAGR over a decade or more of 35%.
So I just want to explain, this means that over a 10-year period, year over year, the compounded annual growth rate was an average 35%. It doesn't mean that every year they grew 35%. It was maybe 0 one year and 80% the next year. But when you look at a 10-year, it was an average of 35% growth per year.
During that time, we've had a number of years that were flat. And this is frustrating. Believe me, it's more frustrating for us than anyone else, because we would prefer a even lower CAGR, but having more certainty. And so, nevertheless, you can ask yourself the question: does it appear that the last 10 years were less dangerous, or the next 10 years are going to be more or less dangerous than the last 10 years? So, it's just a very basic view that we have. The next 10 years, the next 2 years are clearly more dangerous. America is engaged on multiple fronts. And then there's a question, does Palantir have the product market fit and access to the market? Our product, we're looking at the U.S. business that's going to cross the $1 billion mark next year as well. This is like, so you have a $1 billion software business as of next year with positioning that has never been as good. So both our micro positioning and obviously the macro position, it's so sublime, it's hard to talk about without sounding like we're kind of warmongering. And that's why I am positing internally and externally the growth in U.S. government over a multi-year period will be at least as good in the future as it was in the past. However, that 35% CAGR included a number of years where it was flat or even negative, and that's just the frustrating part about contracting at our level. The contracts are so big and meaty that you got to kind of wait.
So this was super important if you're a long-term Palantir investor to understand that even though they're growing at a breakneck pace, which is the 35% year over, CAGR, it can happen that they even go minus on the government side. It doesn't mean that, the need that they're servicing has gone away. It doesn't really mean anything. It's not a thesis breaker. It's just these contracts are so big that they take a very long time to get. And this is why they have the balance sheet that they have with, all the cash so that they can weather these things. And again, this is not very nice for Wall Street. The analysts are not going to like it. The short-term investors are not going to like it. But long-term investors, it's going to give you very big discounts as long as you know and understand it. And he completely calmed down my fears with this answer. I really like how this turned out, and I'm cool with this. I give them a total pass on this. So now, the next thing is also super important, because one of the biggest things I missed in their presentation is they lower their guidance, which is a major red flag, but it's still okay if they're keeping the 30% per year growth on long term. And they didn't say anything about this. And this analyst asked this question, and Alex Karp happened to answer it. It's something that didn't happen the last earnings call. They weren't really answering questions, but he answered this question, and I love his answer. So let's listen to it.
Alex, I wanted to get your view, not just so much on the quarter, but sort of the longer term framework. I noticed that you guys didn't reiterate the 30% outlook. In some sense, that makes sense because deals are uncertain. But I thought it was interesting that you guys took back the 30%, which made it seem that some of the issues that you're seeing in terms of contract. I'm sorry, were you hearing the question?
Alex? Oh, no, I hear you. I was hoping to see you as well, but it's okay. Keep going. I have the gist of the contract, of the
Got
question.
it. So I think you know where I'm going. I think you know where I'm going with this.
We all know where he's going, because if they can't keep the 30%, if it's 20% per year, the stock price needs to be significantly lower. So this is the biggest thing in this. It's not that what the numbers were this quarter, what the numbers were next quarter. If you're a long-term Palantir investor, this is the most important thing in this earnings call.
I am driving the company to get to $4.5 billion in 2025.
Woo! We all heard this number. Fantastic. So let me go over to my Palantir valuation model. It's the same one that you can find on Patreon for $5 a month. First link in the description box below. And I have their revenue in 2025 at 4.4 billion, and he wants to grow the company to 4.5 billion. It's nice to see that we are on the same page with Mr. Alex Karp.
I believe in driving the company that way, and I do not believe what I believe is that the future on USG, and by the way, IG, is likely to be at parity with the last decade for both macro reasons and because we simply have products that we built that were not deployed because they're wartime products. So you have Meta Constellation, Nexus Peering, and other products that de facto are not that useful unless you're at war. Then you have the Foundry uses, the use of Foundry in the Defense Department and another that get usage but not the way they should, for all sorts of issues that are also in civilian. And then you have PG and the fusing of PG and Foundry was particularly useful, but you have to understand it. So I believe that we will get to the 2025 goal. I tend to view the business the way I view our most important segment of the business, which is there will be ups and downs. Again, the 10-year CAGR on USG is 35%.
So I take this as he reiterated the numbers. He has the same goal in 2025, and he still thinks it's real because the macro situation didn't get better. They have more products, they have more mature products, and he says that they had products that were only usable during wartime, which they didn't have. So they have all the possibilities to grow their revenues. And guys, not every company is going to have every quarter good. I remind you for Tesla, where Elon Musk said that they would, produce 5,000 Model 3s per week at the end of, I think it was 2018. And he came in at 1,000 Model 3s per week. It was a humongous 80% miss. And then he missed on the next quarter and the quarter after that. And look at Tesla today. So one bad quarter doesn't mean the end. And especially in Palantir's case, you have to understand how the business works and that this government business is super lumpy. And the government business currently is more than 50% of their revenue, which means that their quarters will be very lumpy, and they talk about this in more detail, but I don't want to bore you with that. Just very important to understand, but super good answers. Last, I want to show you a thing that Karp said about the customers and how they're coming back. And it's not their brand. It's not Alex Karp's personality. And, you know, that sells the customers. And some of the customers don't even want to have Palantir and they're still buying them. And it's really funny to hear this. And yeah, I let you listen to it.
By the way, on this point, one of the most important things driving our software, but especially in commercial, is that people have tried and tried and tried to build our product. We have a number of customers that we've been able to bring on board this year that quite frankly didn't like us. And it's like, but the product brought them back. And why did the product bring them back? Because the product is actually delivering value that is otherwise not available. And you could imagine 2 years ago, you could spend $1 billion instead of spending 20 million on Palantir. A lot of those people have spent $1 billion. And lo and behold, they're being brought back to this product, often with people that do not inherently want to hang out with us, but the product has brought them back. And in the U.S. government especially, the U.S. government has tried everything not to buy our product. We had to sue the U.S. government twice. Just imagine how popular I am. They still are buying the product.
Super interesting. So you can see that to go and circumvent Palantir, you need to invest $1 billion and you have zero guarantee that you have a product that works. And many companies have chosen to go this way. And after spending $1 billion, they come back to Palantir admitting that the product didn't work. This is obviously super bullish for product. So to sum it up, we had a bad quarter. There's no two ways about it, but nothing in the thesis has changed. In my opinion, if the stock drops now, okay, before I say this, I do want to study Q2 more, but still, this is not investment advice, just my opinion with watching the webcast. I'm super happy with how they answered investment questions. They addressed the exact concerns that I had. I'm more bullish than ever, and I love where they're going. And if people sell because of this earnings call and these results, it's a fantastic buying opportunity for us long-term investors. Anyhow, thank you so much for watching. Let me know what you think in the comments below, and I will see you in the next video. Ciao, ciao.